Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, April 23rd, 2024. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES, a downtrending market here in full effect. Monday, a good bounce back day. Bounce back day to the upside here, but still within the framework of the downtrend, at least in the near term for the month. Keeping an eye on the previous session's highs. Any test into those highs could be an opportunity for bears to trap and reverse back down, as after last week's high range week, we could see more of a range bound week early on, especially with earnings on deck. We have earnings throughout the week, including Tesla after the close today. We do have additional economic data points coming out here after the RTH open, including U.S. manufacturing PMI, new home sales, and things of that nature. But really later on this week, GDP is going to be a big one on Thursday, and core PCE price index will be another big one here Friday, with additional economic reports coming out. Earnings for Meta after Wednesday's close, Microsoft, Alphabet after Thursday's close, and additional earnings even during the pre-market trade. So again, right now, this market trading kind of quietly here ahead of news and earnings later in the day. We do have a narrow range of just 35% of average range right now, 28.5 points of range with a downward bias. And again, any pullback even into the previous session's high could be an opportunity to bat the ball back down. This market is barely holding on to the 5,000 level, but any breach of that level starts to open up some key levels below, including FOMC key level at 49.13.5, and the next major CLVN below, which is 48.50. All right, taking a look here at the NQ. You'll notice right here the NQ also looking very similar to the ES. Inside day, 40% of average range, but still within a very clear short-term downtrend. A pullback into the previous session's high could also be defended. That's 17,448. Any push beyond it could be a trap for a pushback below. The high range week in the previous week could lead to a bit of range-bound action early this week with a downward bias, as this market continues to work lower toward the previous quarter's low price. Previous quarter's low price quite a bit lower here around the 16,300 level. We could be looking at a full-on wipeout of that previous quarter's range, with the 200-day moving average coming into play at about 16.4. So still trending down right now until proven otherwise, at least in the very near term. Keep an eye on the previous session's high. Looking at crude oil continues to show quite a bit of weakness here. Quite a bit of weakness. This market has pulled back tremendously from the 88s and is now sitting right on top of 81 for the last 4 sessions, starting the day today with a strong failed new high, and is very close to going outside day down. Outside day down will take place at around the 80.70 level. The previous session's low is 80.70, so to go outside day down, 80.69 would be the level there, and we're currently trading 81.16. The $80 level is still a very clear market structure level overall. So as I've mentioned before, even a drop into 80 could still provide a bounce opportunity on kind of an uptrending basis. This market here has developed this kind of lazier uptrending channel here with very big and heavy pullbacks along the way, sideways action along the way, a couple of good rallies, but this market's still finding ways to push lower at the moment. Today's high, very strong high, right at 83s. So at some point down the road, perhaps a day or 2 or 3 out, that pivot high could provide the level for a solid breakout and rally back to new high. So keep an eye on a breakout through 83s at some time in the near future. Looking at crude oil to gold here. Now gold showing more of a pullback here. The previous session dropped right into those 23.38s. That's a level we mentioned would be near-term support. The expectation was we may see a failed new low and perhaps bounce back up within the range. Today, instead, during pre-market trading, we've dropped even lower. Today's low, 23.04s. 23.04 coming into the 2300 level. Right now, this market trying to find a decent low. We have a lower low failure from last night's pivot low to this morning's pre-market pivot low. Good lower low failure, and if this market can push back up above the 2330 level, it could open up some short-term upside back within the range. So again, this market has been a super bullish trending market here, especially since bouncing off the 2000 level back in mid-February. Can this market turn around and get back higher within the range here? So keeping an eye on prices above 2330 to open up a return to 2340 and perhaps beyond. A failed new low here could develop into a bullish thrust reversal pattern, at least in the near term. Any failure of 2300 and you're opening up another 50 handles down, perhaps even 100 handles down toward 2200. So again, key level here to keep an eye on. Lastly, looking at the YM. The YM here has had quite a bit of strength, especially from the lows. Those overnight lows on the geopolitical news here were strong. It was a strong pivot low that led to a 2-day rally here of 1,200 points. It's one of the larger rallies we've seen in a while. This market still remains in a short-term downtrend, but is clearly not quite looking like the ES or the NQ. Those markets still kind of remain in a very clear downtrending move. This one here bouncing up, especially after the pivot low. It is developing a very narrow intraday range today, just 26% of average range. That's super narrow, with a downward bias still mostly intact. Bears keeping the previous highs here offered here where the breakdown occurred, right at composite VWAP. That's an area to keep an eye on, as any push into this zone could still be seen as a short-term selling opportunity. But right now, over the last couple of days, a very clear up move, outpacing the ES and the NQ, and especially RTY right now. Can this market find a way to push back above the 38.8 level? 38.8 is about where this market broke down. Any push even into that zone could provide a roadblock here that takes prices back to recent lows. Again, this market has taken out all these major levels, and the last one to go grab is the previous quarter's low price at about the 37,300 level. So we're looking for this market to perhaps go get a lower low failure here, or a lower low into that previous quarter's low, and also that would complete the 100% key range target. So keep an eye on the previous session's high. Any test into that zone could be defended here in the near term. All right, that is it for now. We'll see how this plays out here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.